I know what you're going to say. Luke, you started a backtesting series and you never finished it.
Like usual!
Hey, so why are you now doing another video on backtesting? And yes, you're right, but there's a reason I haven't revisited that series, and it's because it became evident that the majority of people watching it weren't actually taking much use from it. That series was specific to the way that I backtest, and most people don't have the spreadsheet knowledge to backtest that way themselves. You need to be comfortable with working with numbers and formulas within a spreadsheet, as you can easily make a mistake which will then in turn ruin the entire backtest, which defeats the whole point of doing the backtest in the first place. So what I'm going to do in this video is talk about more beginner-friendly methods of backtesting that you can use to start backtesting your strategies. Just on a side note though, if you do want me to finish the original backtesting series, let me know in the comments. For anyone that's wanting to jump straight into the backtesting methods, you can use the time links in the description below. Before we dive into that, however, I want to go through what exactly backtesting is and why I think it's a good idea for those of you that may be asking those same questions. Backtesting is the process of applying the rules of your strategy to a historic price action. The aim is to see how that strategy would have performed over that time period if applied consistently to the markets that you test. The obvious reason for doing this is to see whether the strategy itself is profitable or not. The profitability of a strategy cannot be judged on 1, 2, or even 10 trades. It needs to be tested on a larger sample size of trades. Typically, I would recommend testing a minimum of 100 trades to judge the profitability of a strategy before you start trading it in live conditions. Anyone who has watched this channel before may have heard me say this at some point in the past, but a trading strategy is there to give you a statistical edge in the markets if applied consistently. That is it. It is not a silver bullet. It will not get you to a point where every trade that you take wins. If that's what you think your backtesting is aiming for, then you're going to be sorely disappointed. Another good reason to test your strategy is to see if you can make any refinements to improve the performance within the markets you apply it to. So this could be testing different things like different entry methods, for example, or different stop loss levels. You may want to try out trailing stops or different profit target levels and so on. You may already have a strategy that's giving you a statistical edge in the market, but that doesn't mean that it can't be improved, and backtesting is a great way to try and make that improvement. Okay, so let's move on to how to actually backtest. To do this, we need two things to get started. The first thing you obviously need is a trading strategy. So that's the rules that detail how you identify, enter, and manage your trades. And the second thing you need is access to a charting platform with historical price data. The easiest way to get this, if you don't have access already, is to sign up with a broker for a demo account that gives you access to MetaTrader 4. I have a tutorial video for MetaTrader 4 that I will link in the cards above and in the description below that will walk you through everything you need to know, including setting up a demo account. Alternatively, you can sign up for a Tradingview account for free. I will be using Tradingview to demonstrate the methods in this video. I also have a tutorial video for Tradingview on the channel, which again I will link in the cards and the description below. Because I don't know what strategies you are using or what they look like, I can't demonstrate how I would specifically backtest your strategy using the methods that I'm about to go through. Therefore, I will explain the aim of these methods and give you a simple demonstration of how to use them so that you too can apply them to your strategies. I strongly believe that you shouldn't start live trading until you've at least done some basic backtesting on the strategy that you are thinking of using. And with that in mind, I think the first method that I'm about to go through is a great place to start. So let's take a look. So the most simple way to backtest is to run through a period of historical data and log each trade that you would have taken and the results for those trades for that period that you're testing. You can record these results on, say, a piece of paper or in a very simple spreadsheet, one that I'll show you in a second that I've made. Whatever is most comfortable for you, really. Essentially, all you want to do is find out what the strategy would have returned had you applied it consistently over the period that you're about to test. And so this is a very easy and quick method of backtesting. However, there are some obvious limitations to this when it comes to actually improving your strategy, which we will look at in sort of future methods within the video, and you will see why the limitations are there with this method. To put it simply, really, you would have never have known if you could say have used a tighter stop loss or aimed for a further target when you're only recording the number of trades that you took and the results of those trades. But anyway, enough rambling, let's have a look at it. So you can see it on the screen now. We have got the pound dollar up on a 4-hour chart just here on Tradingview, and then this is method 1, so this is the simple spreadsheet that I was talking about. And as you can see, we've split this up into 5 simple columns. We've got trade number down this section here. So this is literally just so we can quickly see how many trades we've taken. And then just so you can reference these trades at a future date if you wanted to, we've got a date column, a time column, and a market column. You know, just if you ever wanted to go back and find these trades, you could do that using this information here. It has no relevance, or bears any relevance, should I say, on the outcome of the trade or the analysis of the trade. It's purely to find it again if I wanted to do so. And then we've got the result column. So obviously in this column we are just going to write what the result of the trade is. I'm going to do it in a percentage, so is it +1, +2, so on, or -1 if the trade loses. So let's use a really simple trading strategy just for the purposes of backtesting. I'm going to say whenever a price breaks a low, I will enter and aim for 1 for 1. The stop will go above the most previous, the swing, should we say? Let's have a look. So using this down move here, I know I'm cherry picking these trades, but here we have a bit of a low. So let's say that we, as soon as this low is broken, we enter, the stop goes above. So let me get the tool here. So we'll say we break it on the low there, stop goes above, we're aiming for 1 for 1, which is here. So as you can quite clearly see, that trade wins quite quickly. So what I would do is I'll go over here. You could see that the trade is the 3rd of September at 2 o'clock. So 3rd September, 2 AM, market is pound, dollar, the result is +1, so +1%. Moving on to the next one, we can see that this then makes a low, comes up, makes a high, and then again breaks that low. So we would enter as price breaks down past this low here, stop above the high, and we aim for 1 for 1, which it hits quite quickly again. Obviously I have picked this strategy because I could see that the trades work or don't work quite quickly. So this is the 4th of September 2020, this is at 10 AM. It's the same market, pound dollar, and again it's a +1%. And you go on like this, in this fashion. And once you've built up a database of trades, you can then, using a very simple formula which is not hard to do, you can use the sum formula and just sum this whole column once you've got there, and that would give you a total P&L for those trades. And then also you would know how many trades you have taken because you've numbered them down the side here. There are other formulas that you can use to count how many trades you would have taken, but I won't bore you with that. But if you do want to investigate further things, there are some really simple formulas that you can use within Excel that would help you understand the data you're recording a little bit better, see it from different angles, I guess. But that's a really simple method. That's method 1. This enables you to quickly see how profitable your strategy would have been over a certain time period. Let's say, I mean, we're doing that on a 4-hour time frame, so let's say we do 6 months to a year of that. We'll probably get around about 100 trades from that time period. Then we would be able to make an assessment based on the total P&L how profitable that strategy is, and then you can move forward from there. Method 2 then is a little bit different. It builds on that first method that we looked at. So obviously the massive limitation with that first method that we looked at was that it was impossible to make any refinements to your strategy as you go through your backtesting, because you're not really recording any other data other than I took a trade, this was the result. I took a trade, this was the result. There's no other data there to say, well actually if I'd have used this stop loss or aimed for this target, this would have been different, and then you can make a decision as to whether that's any better for you or not. You can't do that with the first method, but you can amend it slightly. So here's method 2, and all we're going to do this time is the exact same thing, number the trades down the side, date, time and market so we can reference these trades, and then for each trade setup that we find, I'm going to test 2 stop loss methods. And then this way I will be able to see at the end of this testing run which method has worked better over the 100 trades and yielded the better profitability over that period. So just to run through this again, we'll use the same trades as we used before. Our first stop loss method is going to be the same method as we used previously, and then the second method we will make it just above the entry candle instead. So let's have a look. So this was the first trade we entered here. Our stop went above the swing, and then obviously we aimed for 1-to-1. So we'll keep those same profit targets. So we know that that was on, was it 2 o'clock? Yep, 3rd of September, 2 a.m, pound dollar, and the result was +1. Now, if we change this to just above the signal candle, this all of a sudden becomes a 2.1, so plus 2.1% on that trade. Just delete that so we can't see it anymore. And then obviously the second trade was this one. We came down, we made a low, we made a high, then we broke the low there. So we would have entered here, stop above this swing, and we aimed for 1-to-1. So same, I think it was the 4th of September 2020, it was 10 a.m. pound dollar, the first one wins, and then actually looking at this trade, the entry candle is the high of the swing. So in this situation, that wouldn't have changed, it would have stayed the same. And you can go on like that. All your trades might not be different, it depends what you're testing. This could quite easily have been 2 different profit targets or 2 different entry methods. It could have been anything that you wanted it to be. And then we use the same as we did before. We equal sum, and we sum up this, and then we can just drag this across using the little square, and it will do the same for the next set of cells there. So as you can see, just from these two trades tested, we're already getting a better result from stop loss 2 than we were stop loss 1. Now that doesn't mean that after 2 trades that this one will be better, and that's the whole point. The whole message I'm trying to convey in this video is that you cannot base any results off a tiny sample of trades. You really need a big sample of trades to make any meaningful discoveries about your strategy and the profitability of it. But that is another simple way to backtest. It's not very time consuming, it's not very hard to do. You don't need many skills within, say, Excel. You could even do this on a piece of paper, and again, it wouldn't really be much more laborious than this method is, but very easily you know more information about your strategy than you did before you started, and you can make improvements if you want to. Moving on to method 3 though, and we need to look at this full screen to see it. This is where things can get super complex. So it's basically taking that second method and injecting it with a load of steroids. Now we want to know not only 1 or 2 different things, we want to know everything. What happens if I use various different entry techniques? What happens if I look at various different profit targets? What if I use various exit methods? So when the trade's in progress, like different management methods of that trade. What if I use loads of different stop loss levels? What's going to give me the best combination of all these different variables to give me the best outcome with my trading strategy? Now, your overall analysis of the market will stay the same regardless of all these different techniques. Just because you're using different entry methods, different profit targets, different management techniques, and different stop loss levels, that doesn't affect your analysis of the market. That doesn't affect the move that you are looking for within the market, at least not with the strategies that I tend to use. So I'm able to test all of these different aspects of the strategy, and to me it seems an efficient way to do so, to test them all in one go. I might as well look at everything whilst I'm going through that period of time and back testing. Yes, it takes me a lot longer than it does to do those other methods, a lot longer, but I think it's a trade-off that's worth it, because you get so much more information from this data than you do the previous one. But that's not to belittle the other methods. They're just as, like I said, they're just as credible. If you know that your strategy works and you're happy with that, or you think your strategy works and you're happy with that, and you want confirmation in some form of backtesting, those 2 methods are brilliant. You're going to get that. You're going to get 100 trades tested on historical data, and you're going to get a result. The obvious limitation is, with the first one, you're not going to be able to make any amendments to that strategy or refinements to that strategy, and with the second methods, you can only do a couple at a time, and that might suit people or it might not suit people. But yeah, this is the third method, and this is very close to what I was going through in the backtesting method, the backtesting series that I did that I haven't quite finished. And essentially, like I say, it just looks at all these different aspects. So there's different entry techniques that I'm looking at. There's different profit targets that I'm looking at. There's different ways of managing the trade when it's live, and then there's different ways of actually setting stop losses when I get into the trade. And then from all this data, I can break this down into different things. So essentially what I'm doing here is then saying, if I use stop loss method 1 with entry method 1, what will be the result? Same with stop loss method 2, entry method 1, and so on and so on. And then you build all these data. You build all this data up. And then what I tend to do is in another tab, I will analyze all these findings. I know this is going to look super complicated and maybe unnecessary. And you don't have to do all this, but it's just something that I like to do. I like to know the numbers around what I'm doing. And then I can essentially break it down into all different kinds of analysis. I can do it. I mean, it really depends what you've tested to show you what I'm looking at here. But this was distance between support and resistance zones, and I was looking at the analysis around that. I was thinking about doing some stuff around certain time intervals, certain points of the month, of the year, sorry, and so on. This is quite an old test, actually. I think it's about 4 years old, this one. So there's a whole host of things you can do, and obviously what I wanted to do, one thing I wanted to see was what gives me the best result, what exit method and what stop method will give me the best result out of all the ones that I've tested. And you can see I've made this sort of little cross table, and I can see that stop method 3 and exit method 4 gives me the best outcome here. I can't actually remember what the strategy was for this particular test, but whatever it was, exit method 4 and stop method 3 were the best ones. And so that's kind of what I was trying to build up to in the backtest series, and I do realise that it would have become quite complicated and convoluted almost. So I appreciate the feedback that I got on that, but I didn't want to not include this. I know there will be less people that are interested in this type of testing, and I get that. And like I say, I'm not belittling any other of the methods. I think they're just as credible. It just depends on personal preference. If you are one of those people that wants to know all about the numbers, every number there is almost to know about your strategy, then testing like this might be more for you. If you simply want to know the profitability or to test one or two aspects of your strategy, methods 1 or methods 2 work just as well. So yeah, there's the overviews of the backtesting methods. One thing I wanted to mention before we finish is there are a couple of things that could help you with your backtesting, just in regards sort of chatting platforms and things like that. Now this is not really specific to the methods that we discussed, but it's just helpful little pointers that if you're new to this you might not know about. And trading within a lot of you will maybe using MT4, and as good as that platform is, it is quite basic, which is why I so strongly recommend it to new traders, because it's free and it's pretty basic. It's easy to get your head around. If you do move over to something like Tradingview, there are a couple of tools that will help. One is obviously these position diagrams, for the want of a better word, that let you show your stop loss and your take profit, and you can see they darken the areas where the price has actually moved within them. They're good. They're really useful for things like screenshots or even just visually seeing where the trade would have gone. They're not going to make your backtest any better. They're just there as sort of ease of use sort of thing, like a nice cherry on the cake sort of tool. Also, if you pay for Tradingview, I think you might be able to use it. If you don't, I'm honestly not sure. But if you are a pro member, you can use their replay tool, which is fantastically helpful, because sometimes you can get a sort of subconscious kicking in, and when you're backtesting, and even though you're trying not to cheat, for the want of a better word, if you can see in sort of your peripheral vision where the price is going, it might play a sort of a role on your decision making when you're backtesting, saying, well, would I have taken this trade? Would I have not taken this trade? And if you've already seen in your peripheral vision that this trade wouldn't have worked, and you've recorded a couple of losing trades already, subconsciously you might decide not to record that trade. I'm not having to go at anyone that does that. I've done that plenty of times backtesting in years gone by, and then you come back to it and you look and you're like, why did I record this trade? It was quite obviously a losing trade. You're only cheating yourself if you do that, and this helps stopping that from happen because you can't see the price action. So using the replay tool, it hides it, and then you can sort of forward one candle on at a time. Okay, I mean, so we've broken a high here, for example, using that simple strategy that we were using. We could say, okay, well, stop goes below, target's 1 to 1. Let's see if this works. Yes, and then you record it on your spreadsheet or on your piece of paper, and there is no subconscious kicking in there. There's nothing, do you know what I mean? You've not seen anything in your peripheral vision that's going to affect the outcome of that trade, so it's a really helpful tool. There are other platforms that have this replay tool. Off the top of my head, I know eSignal has it. If you do use eSignal, that's very expensive in comparison to some other platforms, so don't go out and get it just because you want a replay tool. And some of you, if you've seen my live trading videos, I used to use a platform called Motive Wave more often than I have done. In fact, I'll just load that up. Okay, so now we're in Motive Wave. You can see we've got the Euro-Yen chart up here, and the replay tool for this is up in the top corner. This brings a little bar up, and you sort of, I think you pick where you want this to start. So if we go back to, yeah, that'll do, and hit the start button, it then generates that from there. And then using the little control panel, it works exactly the same way as it did in Tradingview. I can just cycle through these candles one at a time, and if I see, say, a break of a high like I've got there, I don't have the same snazzy tool as I get in Tradingview in here, so you've got to do this a little bit more. It's a little bit more cumbersome. So if the break is, oops, the break of it is here, say, then I want to use the ruler tool to see that my stop would have been 17 points, so I'm looking for it to come up to about there on the chart. So it was about up here. So then I could sort of fast forward, see what would have happened first. Yeah, so again, the take profit would have been hit. I would record that on my piece of paper or in my spreadsheet and go from there. And actually, Motive Wave does have something else which is quite cool. I think you can set up a replay account if you've got the right package. This is my biggest bugbear with this platform. I won't get into it now, but essentially they've broke it down into about 1 million different packages. And if you've got the certain right package, you can actually have a replay trading account. So what that means is, rather than having to actually manually put where you would have entered, where your stop loss be, where your take profit would be, you can use like a paper trading replay account to say, right, I would have entered here, here's my stop loss, here's my take profit, as if it was a live trade, and then fast forward that, and it would record your P&L for that trade within the replay account. It's a really cool feature. It's just difficult to get your hands on it, because I think the package that it includes is, you know, you pay more for the more features that you get, and I think there's quite a jump between certain packages, and I just didn't need it at the time when I bought Motive Wave, or I didn't realise it was on there, one of the two, so I never got it. But I have seen it in action, and it is a cool tool. There may be other platforms out there that have a similar thing like this, which again, it's just something that helps you backtest. It's not going to make your results any better, it's not going to make your strategy any better, it just helps the process of you backtesting your strategy. So it's just some points that I wanted to make you aware of. And that wraps up the video on backtesting. I really hope you found this useful. The methods detailed in this video should definitely help you get to grips with backtesting a little bit more. I know the backtest series that I did previously was a little bit convoluted for some people, and you know, I could see quite easily how it could start to go over people's heads. So I do appreciate that, and I appreciate the feedback. And like I say, hopefully these methods here, although they are a little bit simpler, they are still just as credible. If you get good results from these backtesting methods, then it should stand you in good stead for future performance with your trading strategies. And as usual, if you have any questions or any comments on the video, please let me know down below, and I shall see you next time.